Hello and welcome to myfinanceteacher.org. Over the last couple of months, grains have been relatively boring, mostly going sideways to down, with an exception of soybeans, which have been relatively boring as well, moving sideways to upwards over the last couple of months. Let's have a look at three grains today, starting with wheat. As the model portfolio shows for the members at myfinanceteacher.org over here, we have been playing wheat with relatively small position sizes this cycle. We were buying in late August, early September, and selling mid to late October with very modest profits so far. And since our sales, wheat prices on average have dropped by another 13 or 14% or so. So in general, in one sentence, what I would say about wheat is that it has the potential to become somewhat interesting, perhaps in the next 1 or 2 weeks. First, the average cycle duration is just around 4 months. The ongoing cycle with the potential of the recent low would give us a duration of 110 days, which is pretty close to an average duration. So that tells me that there is a chance that the cycle has finished over here in early December. Plus, RSI we see has reached all the way down to 25. That's pretty low, that's oversold, meaning that even if wheat were about to drop again to some sort of a true cycle low, perhaps a bit of a bounce out of these oversold conditions is quite likely. Zooming out a little bit, over the last 3 years, the 14-day RSI has poked noticeably into oversold levels only 4 times. Usually wheat cycle lows came with this 14-day RSI reading anywhere around the mid-30s. Additionally, this recent low came pretty close to this support zone of a bit of a double bottom for a cycle low from January this year. So purely technically based on this support zone, there might be a bit of a bounce and potentially a new cycle starting relatively soon. And lastly, on technicals, wheat has poked several times below these Bollinger Bands. Bollinger Bands are not extremely wide right now, but they are somewhat wide, and usually poking multiple times below relatively wide Bollinger Bands is a sign of a bit of a bounce coming up. Next, looking at the optimism index, it's been pretty low again in early December, all the way down below 20. And again, usually historically cycle lows in wheat, at least since the beginning of a bit of a commodity bull market in 2015, came with this optimism index somewhere just below 30, and this time we've seen this index poke below 20 again, suggesting that perhaps a new cycle is either about to start over the next couple of weeks, or it might have started already in early December. And next, looking at seasonality for wheat, this suggests that even if the cycle has actually started over here in early December, we might not really expect any significant gains within this next cycle before a bit of a correction into a late February, which might give us a bit of a short cycle lasting for 3 rather than the usual 4 months. And perhaps only after that, a bit of a stronger rally, at least based on seasonality, might be expected. This actually makes sense if you zoom out a little. Over the last couple of years, corn has gained quite a lot since, let's say, the pandemic low, the recent highs. Corn gained over 160%. That's a 2.6 multiple. Clearly, after such a strong move, in a bit of a consolidation is quite likely. We've seen the significant drop in corn prices as part of a cool down, and perhaps a bit of a sideways move without any significant rallies within the next cycle is to be expected as part of this consolidation move as well. Next, let's have a look at corn. Corn is getting kind of interesting as well. This corn cycle with this potential low again in early December has been going on for 138 days. That's again getting close to this average duration of around 5 months. So perhaps if this downtrend channel is to sustain for another couple of weeks, perhaps with a bit of a positive divergence on RSI forming again over the next couple of weeks, if corn comes down again to the bottom of this channel with RSI making a higher high, that would form a positive divergence and a bit of a signal for a likely cycle low coming up, especially as it would be a bit closer to that average cycle duration of around 5 months. Alternatively though, if corn were to break out of this downtrend line over the next couple of days, that might be an interesting sign that perhaps we've seen the cycle low on the 7th of December. But at the moment, the trend is intact. The trend is your friend until it isn't. And looking at the optimism index, we see that it's recently bottomed only around mid-40s. Historically, you would like to see this optimism index come closer to below 40 to indicate a likely cycle low. Next, looking at seasonality, a bit of a different signal here, as opposed to expecting another dip into that true cycle low, perhaps over the next several weeks. Seasonality suggests that corn usually bottoms out somewhere in early December and trends upwards from there all the way into late February, early March. So there are some mixed signals over here from seasonality and optimism index for corn. Perhaps it's a good idea to wait and see what happens over the next couple of weeks. And lastly, looking at soybeans, there is an argument to make that perhaps the cycle already finished over here in early October, but that would give us quite an unusually short cycle. So perhaps it's more likely that the cycle is still ongoing at 146 days. We see that the 14-day RSI is giving us lower highs, while the price is giving us higher highs. That's called a negative divergence, which sometimes is a bit of a precursor to a correction, perhaps down into that true cycle low. And cycles usually last for around 4.5 months. The current one is perhaps getting stretched a little bit. And I would probably only start to become interested if over the next couple of weeks I would see this rising wedge broken to the downside. And looking at technicals, looking at statistics, historically, a rising wedge is a bit of a bearish formation. On the other hand, though, one could argue that you see a bit of an ascending triangle over here all the way since summer this year, and a rising triangle is usually a bullish sign, breaking more often to the upside than to the downside. But again, with a bit of a negative divergence on RSI, perhaps there is a chance that in this case, this ascending triangle might actually first give us a false breakdown into that cycle low before the rally into the new cycle. Looking at optimism index for soybeans, all the way since October, optimism index has been fluctuating somewhere around 50. Again, perhaps we have seen a relatively short previous cycle ending in October and a new uptrend all the way into January. That is a possibility, but I would only try to take a swing at soybeans if I see this optimism index much closer to 40 or perhaps even below that. And lastly, looking at seasonality, we see that it disagrees a little bit with the cycles, showing a strong uptrend in soybeans, usually over October, November, and December, all the way into late January, where we might see a bit of a correction, perhaps into that potential cycle low. But despite this relatively strong uptrend, perhaps all the way into late January, at the moment I'm not really excited about soybeans. If there is a more recognizable cycle low with a better buying opportunity, I might try a bit of a trade in soybeans. At the moment, though, I'm interested in a lot of other trades, all mentioned for the members at myfinanceteacher.org, with a lot of exciting possibilities in, let's say, precious metals, as well as a range of other asset classes. Join us for more details. Join now, as from the beginning of January, I'll remove this introductory half-price offer. For now, though, have a nice day. Bye-bye.